Did Samuel Leeds just got exposed? He said, if I lived outside of the UK, I can make £1 million a year and pay zero tax on the rental income. The famous property guru Samuel Leeds, who sells thousands of courses, has been recently challenged by a tax lawyer who took down the UK former Chancellor Nadeem Zahawi. In this video, I will raise 3 points that UK property owners overlook when doing tax planning, and it includes looking at potentially leaving the UK to save tax. I will also analyze different posts made by Samuel Leeds that triggered this online debate. For those who are new here, I am a chartered accountant from London and I help people deal with finances and tax. First of all, I would like to clarify my own position. I personally like the content made by Samuel Leeds, and I think, he's not a tax professional, so I wouldn't go to him for tax advice, and he must have a qualified tax advisor in his team. However, being a tax advisor myself, looking at what he has posted, I can see how his post could be misleading to people who are not skilled in navigating this overly complicated tax system that we have in the UK. Therefore, anyone who sells courses and you share tax advice with your followers, you should encourage your followers to seek professional advice. And the fact that tax solutions may not work for you based on your individual circumstances. A good advice is worth its weight in gold. Now I will go through the 3 common misconceptions that I believe UK landlords have. Number 1, if I lived outside of the UK, I can make £1 million a year and pay zero tax on my rental income. Although for some people, if they were to leave the UK, they could save tax, but they cannot save taxes on UK sourced rental income. There is a great deal of confusion around this topic. UK land and property is subject to tax even if you leave the country. It does not matter where you live. This is incorrect advice that landlords should consider leaving the UK and they can pocket 100% of their rental income legally if they were to do that. This tax strategy does not work and there is no benefit even if you leave the country. Number 2, if I set up a trust, I can transfer my properties to my children without any additional taxes. This is correct to some extent, but people forget to consider some complicated rules that come when you use a trust. Trusts are extremely complicated tax structures. There are entry charges, which means you have to pay upfront tax when you transfer a property into a trust when the value is above the 325,000 tax-free allowance. And there is another rule, which is that every 10 years you have to pay 6% tax on the assets above your nil rate band. Any money that you take outside of the trust is taxed at source at the highest rate of tax, which is 45%. So you can appreciate that trusts, although it's a good method to avoid tax, but you can easily get it wrong due to these additional rules. Number 3, non-residents are exempt from paying UK capital gains tax. So I can just go abroad, sell my properties and avoid paying tax. This is another area that has caused a lot of confusion. It is true that non-residents are exempt from UK capital gains tax, but the devil is in the detail, and it does not work for property owners or landlords. Even if a UK property owner lives abroad, they will still have to pay UK income tax and capital gains tax. And you cannot, go and live in a different country for a short period of time to sell assets, obviously, and then return to the UK. You must be prepared to leave the country for a considerable amount of time to successfully and legally avoid paying UK capital gains tax on non-property assets. I hope you found this video useful. If you like to stay connected, I make videos like this about tax, about business, and what's trending. You may wish to like and follow this channel, and I look forward to seeing you in the next video.